What's up, guys? So welcome back to my YouTube channel once again. So in today's video, I'm going to be doing a quick breakdown of some three trades that I took on Monday. That was yesterday, right? And the reason why I'm doing this breakdown is because many people believe that to get trades like 1:50, 1:30, I mean, it should be from, let's say, daily or weekly or whatsoever. But this is not the case with these trades that I took, right? It was three trades and they all summed up to about 60R, right? And believe me, these trades were all caught on just the 15-minute time frame, just within one 15-minute leg. Okay, so if you stick around to the end of this video, trust me, you are going to get insane knowledge from this video that's going to up your trading game, right? Apart from that, these trades that I took, right, one of them had an element of liquidity inducement, so I'm going to show that as well. Okay, you know that normally I don't like to show lower time frame stuff, but in this video I am going to show you that. Okay, so if you are not subscribed to the channel, kindly hit that subscribe button and turn on post notifications. Make sure you don't miss other future important videos, right? So with that being said, let us jump straight onto the charts. So welcome back to the chat, guys, and first of all, I would like to thank you all for the support that you gave me. Somewhere last week I was thanking you on my social media handles for 100 subs, right? This morning I woke up and it was over 180. Yo, thank you so much for the support. Okay, so this video is purposely for this to say thank you to you guys. Okay, so in this video I will be showing you how I caught these tricks, like I said in my intro. So it is going to be short and precise. Okay, I'll try as much as possible to keep it short. Okay, and don't skip any part of this video, because if you skip, you're going to miss a whole lot of things. Okay, so let us quickly begin. Okay, so always market structure first. Okay, so what I saw is that 15-minute was making what? Lower highs, right? And lower lows. Okay, so my recent 15-minute swing was from here to this place. Okay, so you can see that I've specified my break of structure over here. Okay, great. So I just marked my point of interest over here. There is one point of interest over here, but I didn't mark that. Okay, and I think by now you should understand why I didn't choose this point of interest. Okay, because it's going to fail. Why is it going to fail? If you don't know why, check out my video on the best Asian session liquidity. You'll find out why. Okay, so quickly, so after finding out this Asian leg, after finding out this swing leg of the 15-minute time frame, right, I just knew that price was supposed to retrace to the supply zone over here. Okay, so in short, this trade was a counter trend trade. Okay, and it gave me about 3 opportunities. Okay, and I took them all. Right, I'm going to be displaying a screenshot of my trades on the left side of the screen. Okay, so what did I see? Right, so if I switch to the 5-minute time frame, you're going to see this. Okay, when price had broken structure, you all know how I use this Asian high, Asian low stuff, right? If you've not watched my video on the best Asian session liquidity stuff, you can go and check it out. Okay, so I knew this was my Asian high, right, and this was my Asian low. Okay, so what did I see? I had my Asian low taken. Okay, and after that Asian low was taken, I had that break of structure to the upside. Personally, I missed this trade. But that's fine. So if you had not missed that trade, if you were also looking to take that trade, okay, it was a valid trade, right? You would have had your entry from here and your stop loss will be here, and then you are going to target the Asian high to take out the Asian high, right? That would be like 19R, but I personally missed that trade, so I mean, let's just let that go. Okay, so after that, I just saw price making internally saw price making a bullish order flow. Okay, so I've had my first break of structure, right? price comes down, retraces, and then makes that push. Okay, so I personally remember that I shared in my public Telegram community that we are going to be buying from this level. Okay, and I'm going to show a screenshot on the left side of the screen as well. So the price spiked up to the upside, right? Personally, when I saw this price spike up to the upside, I didn't even have that confidence that it was going to come down. But who knows? I mean, I didn't delete my order, right? My buy limit. I didn't delete it. I just left it on because I knew that if price should come down, definitely we're going to have my buys triggered, and that's what happened exactly. Okay, but what again led me to hold or not to delete this buy limit? Let me show you real quick on the 1 minute time frame. Okay, so this is just like some lower time frame source that I'm giving to you guys. Okay, so this is where the whole liquidity inducement thing comes in. Okay, so if you watch here, okay, first of all, look at the time here. Okay, I think you guys should know that session timings has changed. Okay, so initially London was starting at 8, now it's starting at 7, right? And then initially New York was starting at 2 p.m, now it's starting at 1 p.m. Okay, so you should know those changes in times right now. Okay, so in here I was very sure that this setup was going to be a smart money trap. Okay, so combining the timing of the session and whatever setup I was looking at here, I knew that my buys were going to be triggered. Okay, so smart money people will be looking at this as a break of structure, okay, which is fine, and then they will see this push to the downside, right, and then this push to the upside, and so they'll be confident to be looking for buys in here. Okay, so you can see that I have specified right there in the rectangle that it's a trap. So this is an inducement. Okay, so it induces smart money traders to buy, and then at the end of the day it smashes their stop losses, and then it just move back in their way, like what it happened right now. So I was in this scenario, I was combining the session timings with structure and liquidity. Okay, so initially I've had my Asian low taken already. I've had price push to the upside. Okay, it's just that same three simple steps that I taught you in my previous video. Okay, so I've had a break of structure to the upside. I've had my demand zone right here specified. Okay, and that was where my entry was. Okay, and then this time round I am adding what? The session timings and liquidity inducement to it. Okay, so many people were looking at this as relatively equal lows, and so they were looking for price to take it out, which is also fine. Okay, but just understanding whatever happened right here before my entry got triggered, I mean, is key. Okay, so we see this first inducement right here that got smart money traders trapped, and then after that I had price hitting my or triggering my buy limits, right? So that was my first entry right here to the pip. You can see it was just a wick tap, and then it just moved. After that I had my entry confirmation right here, okay, for a scaling, and I took that as well. Okay, I took that as well, right? So that was the second entry right there. That was the second entry right there, and the third entry was right here. Okay, so I saw that price had broken structure from here. Okay, so after the break of structure, right, we had a retracement, and then we had another push. Okay, so the same three-step process: break of structure, wait for price to come back to the demand zone like it did, right? So initially, personally, initially I took an L right here. Okay, because I had my buys limit set here. Okay, so I took the L. I'm not gonna lie, I'm just gonna be transparent as possible. So I took the L from here, but if I took an L, it doesn't mean I should just go off the chart, go and sleep or whatsoever. I still knew that I had another reason to enter, right? So what did I see? Okay, I saw equal lows right here, relatively equal lows right here. Okay, so liquidity to the downside. I saw relatively equal lows right here. I saw price take out that liquidity inside what, this structural level, right, or this structural leg. And then also I had another confirmation. Then I took the third buy, right? And where were my targets? I have marked my supply zone up there, and I told you that this trade is a counter trend trade, right? I told you that this trade is a counter trend trade. Okay, so personally, at this highs, I took majority of my volume. I'm not gonna lie to you, I took majority of my volume, right? So my real targets were up here just below the supply zone that I marked, and this supply zone I was looking forward to sell this morning. I think price didn't tap in, but I just missed it by a pip. So my first trade was 30R, the second one was 19R, and the third one was 12.5R, and this is as simple as that. Just understanding market structure, liquidity, and then you just piece all these things together, and then you'll be taking really, really good trades. So this is just counter trend trades that I took on 15-minute time frame. You can see that I didn't even go to the 4 hour, I didn't go to 1 hour. It was just 15-minute time frame counter trend trade. Okay, so this is where I'm going to end the video. If you had enough value from this video, give this video a thumbs up, and if you're not subscribed to the channel, please subscribe to the channel and keep supporting me. Let's make this channel grow. Okay, so see you in the next video, guys.